And good morning, everybody, and welcome to the Triggercharts pre-market rundown for Friday, June 24th, 2020. Hopefully everybody's doing well and having some success with their trading. We have markets off a little bit this morning. We can see from the top here, we have the Qs down about 1%, the S&P 500, the futures down about 0.36, and the Dow down at 0.34. And we've seen this little bit of a rotation happening right now with regard to where markets are, and in particular, relative to technology. We're starting to see that earnings are rolling in, and that has been very significant and obviously providing us for some insight into how things may roll off into the near future. Before we get any further, I want to mention that investing, of course, involves substantial risk, and past performance is not a guarantee of future results. And a loss of the original capital could occur. This is for educational purposes only. And please use your best judgment when investing. So now that we talked about that, let's move on with what is going on this week and what we have and what are the reasons why maybe some of the markets are moving. It could be just a simple, quick consolidation, and we'll get into the discussion of stocks. On the right-hand side here, you see we left it up from last week. Netflix obviously hit that incredible high that we saw last week. And earnings came out, went from, the top end about, what is that, 572, we'll call it, for a reaction high. Currently trading at about 471, down about 1.22% again today. A little bit of a hole here, down to about 457. Charts are as simple to look at as that is, and you're looking at the Commander Series. And, of course, all the Commander Series are available, and all of the indicators from Triggercharts are available over on the TradeStation Trading App Store. There's a 10-day free trial for every single one of them. Some of them are free, actually. So if you have a TradeStation account, if you want to install these, you've been thinking about these, it's very easy to do. And there's a video that will even send you on how to install if you have any difficulty with it. But you can get a 10-day free trial. I put in the chat a link to the Commander Series, and that will give you the things that we're looking at today. In particular, what we're looking at on the right side right now is our chart that shows the autopilot, which gives you the coloration of this. And for those of you that may not know and have not followed this before, the yellow is a signal that says, hey, wake up, something's going on here, and the potential for a confirmation is coming one way or the other. It could be either a red bar or a green bar. The bias to the long side is when you see that the yellow bar comes in, and then you have a green after that. And from there, what you have is the same thing where you see on the bottom here, where you have a yellow bar, which is an alert, and then you have a confirmation, which is on the bottom here, which is the red for the short. So, right here, if you would have shorted right there at about 435, you would have gotten about down to where? 419 on the short. Then you got some consolidation, which is great. So we did this to make it pretty easy to understand, pretty easy to use. Okay, with that, let's talk about what's going on. Clearly, it's earnings season, right? A lot of people are talking about this just being a simple throwaway period where we're going to have the same thing that we saw last time. And what happens is that whatever the numbers are, whatever the guidance is or isn't, if companies pull guidance, we're just going to pretty much ignore it because things are going to get better in the future. That's the mindset of what it has been so far. Whether or not that's going to change, whether or not we're going to see that there is a differential happening, that there is going to be all of a sudden a change of thinking, and that there is going to be some importance. I mean, we saw Intel come out today with some pretty soft guidance. Stock is down pretty hard. So the game plan right now seems to be by a lot of companies that they know they can come in with a miss, and a lot of the market analysts are going to be okay with it, let's say. They're going to be thinking that, you know what, it is a pretty ugly situation out there in terms of the economics and what's happening. And, let's give them a buy. Let's give them a pass. And companies are onto this. And what they're doing is coming back and saying, the good news, especially retail companies, we missed and we're concerned about the future. We may pull our guidance, but what we're going to do is tell you that our online sales have rocketed. Now, I don't know about you. Whether you get sales from online or whether you get sales from a retail store or any other way, the fact is the revenues are the revenues, right? Whatever the revenues come in really should be the number that we're looking at here. And when you come in light and you project light, it doesn't matter if you get your earnings from whether it is the online or the retail store. So Twitter was a really good example of this, even though it's all online. The revenues were down hard. They missed on earnings, but they talked about how their daily activity user growth was really impressive. Stock was up nicely yesterday. Tesla beat, but if you look deeper, it looked like there was a lot of tax credits involved. That's why Tesla's selling off so dramatically, so it seems. Microsoft looked good. Probably the stock just got ahead of itself. So these are kind of some of the things that are going on right now. The big question that is really on the mind, I think, of a lot of people, and particularly in the markets, is what is the next stimulus going to look like? You know, PPP is running out. There is some discussion about a new PPP program that is going to be initiated, and it may be a little different, a little bit harder to get. And what's happening is that the PPP program may be renewed. They're talking about a number of hundreds of billions of dollars for this. We also have the bigger issue right now, which is that the federal $600 per week is running out. And with that, what that means is that people who are unemployed, and I think there's a total of 17 million people, I think that's the number, of people that are currently getting some kind of unemployment claims benefit. And as such, what happens is that right now, they're going to have about another week or so until this runs out, and then they'll get probably money for a couple of weeks after that because it's in arrears. And then all of a sudden, there's going to be nothing. So on the table right now is to talk about $100 per week. There's also talk about 70% of prior earnings. I'm not sure how they're going to do that. Either way, they need to do something very quickly. There may be an executive order to extend this $600 a week. This is a big issue. Really think about what that means if consumers don't have money, because the consumers right now are still on their back foot. And the fact of the matter is that they need money to consume, and that has been very important for markets. And the big issue, of course, is what will in totality the entire next stimulus look like? That is a big thing for markets right now. COVID virus 19 update. I mean, really right now there's some epidemics and some hotspots around the country that's problematic. I guess we could say uncontained for a bit, questioning whether there's going to be some new shutdowns. A couple of virus vaccines that have been announced. Actually, there's 3 in total, but 2 important ones. One from Moderna a couple of weeks ago, then AstraZeneca came out with theirs. AstraZeneca looked a lot better with some T-cell protection of some sort. I really don't know all about it, but there was something about a double punch, they called it, a double benefit, where it would actually last as a booster for a long period of time. So that's a big issue, but it is kind of wearing off right now. You know, the whole idea of the vaccines were really hot for a while. Now all of a sudden we're getting into the whole earnings thing and the questioning, you know what, even if we have a vaccine, when's that vaccine, even in a fast track, when is that vaccine going to happen? So something to look at. Let's see here. What else do we got here? Oh, we had a great rebound for existing home sales. One of the best existing home sales numbers, again, from a very low level compared to when things were closed down entirely to now they're kind of open a little bit more. There was a couple of times over the last day or so that the KRI indicator, which we'll kind of take a look at right now because somebody had a question on that as well, but the KRI indicator flashed a +4 and then resolved by the end of the day at a +2 yesterday. So we actually had this riding up again. The KRI indicator, the key reversal indicator, right now at a +2, and the gauge shows you on the right-hand side that we're also at a +2. It tells you where markets are from a sentiment, and we'll call it an overbought, oversold, or overheated, oversold basis. So what we do is we combine a few psychological indicators as well as some key levels of overbought, oversold, you know, things like the McClellan indicator potentially, or concept about advanced declines, as well as a Spearman indicator and a few other things. And a lot of things go into this, but basically what it tells us here, just for one stock, that's it, or what, not a stock, but one symbol, we use a broad-based indicator, the SPY. If you put any other symbol in here, it won't work. It just won't work. And it tells us when things are getting really, really hot or really problematic on the downside. So kind of if I bring this back here, we'll notice these clusters, these dots. You see the dots here and the dots over to the right, the red dots and the green dots. So what this tells us is that we are seeing on this side an oversold situation starting to develop. We got all these magentas. Let me tell you, rarely do we see magentas. Magentas are when you start getting over 5 or 6 and you started getting multiple clusters in a row, telling us that things are really out of control to the downside. Now, this is March 23rd right here, right? What date was that? That was the 18th. The final low was on the 23rd, right? But we were saying, hey, you know what? We're starting to get a little bit overdone here and wait for that reversal to happen, and there could be some great opportunity. Over here, right here, this was pretty unbelievable because I've never, ever seen this before, and we got officially a +7. This is a 7 up here. So right here, when we look at this, right on the top here, we had a +7. And I said, and I came out on Twitter and said, you know what? We've never had a +7. That overheated. There's going to be a need for the market to cool off a little bit, consolidate for a while, and wouldn't you know it, we had that massive 1,800-point day only 2 days later. So what it's saying right now, and how to read this is, when we read, we put this on here, by the way. This is a very inexpensive indicator. It's just something you have on the side. It's something that you just keep on your desktop, looking on a regular basis on where are we. If we have a trend that is generally positive, and we have a KRI that's 0 to 1-ish, right now it's a 2, we can say that, well, the direction that it's holding is probably going to continue for some time. When it gets to the overheated area, the significantly overheated area, or the oversold area is where we really need to start perking up and looking. Now, if you read very simply what it says on the right side here, it says the market's near equilibrium. And the overall market is measured by the KRI algorithm is near equilibrium with a slight bias towards upside movement. That's what we are generally. It's a big picture here now, which is what we have seen until yesterday, let's say. Watch for the current trend to continue with a directional movement skewed through increased demand and not enough supply. Now, remember something. I will share with you that this was a +4 again yesterday. It resolved a little bit down towards the end of the day. And a +4 has a much different discussion. A +4 talks about how markets are overbought and look for a potential reversal to happen in the next few days till we can bring it back to equilibrium, or until we get such that it changes dramatically and the trend changes dramatically. So right now, we're actually moving from, if you think about where we were 2 days ago, right where we should, which was from an overbought to trying to resolve some of that overbought indication. So that's the KRI indicator. Let's clear all these, bring back this, and go back here. All right. Next week, we have durable goods, FOMC rate decision, which we don't think anything's going to happen there. We have an interesting thing happening that we need to pay attention to. It's going to be really pretty historic. We have the second quarter GDP preliminary number coming out, and that is probably going to be north of or south of -30%. That's the estimation, at least. We have personal income and spending, PCE prices coming out as well. So we're going to look at a few different stocks. Some people have loaded up a few stocks as well for me. And if you have any that you want to have us take a look at, let's do it. But I had a few things loaded up because, honestly, there was some great moves this week. And I want to start with silver and gold. Let's start with gold first. So what you're looking at right now is the Commander series. What you get is on the top here, you get a sequence of multiple time periods. You got here, this is the 30, right? This is the 30, 60, 240, daily, and weekly. One of the reasons why this indicator is so popular is nobody else has figured out how to actually do this, where you can put multiple time frames across one row and have it show up in columns very easily. Otherwise, you know what you have to do? You have to put the symbol in 4 or 5 times and then change the interval on the symbol, and it creates a real big mess. So what we're doing here is we're giving you something a little bit different. We're giving you a row which has all the information. You could change these. You have to keep the 30, but everything else can be changed. But what it shows us is when we look always, and I teach you this every Friday, we look from right to left. And when we look from right to left, it shows us, okay, the weekly is long right here. 14, this is for what? SPY. The weekly is long for 14 bars of 14 weeks. 14 days also, we've seen daily. We've seen 30 bars on the 240. Now we're starting to see that turn. On the 60, we have 3 bars, and on the 30, we have 5 bars. So right now we're looking at the daily, obviously very extended for gold. Let's just go change up to gold for a second. Let's put that down here. See what that looks like. So gold has been long when we look from right to left, right down on the bottom here. Long 15 bars on the weekly, 4 bars, which you see 1, 2, 3, 4, right here. This is the daily. 4 bars on the daily, 10 on the on the 240, and then we go down to the short time periods, and we also have longs of 14, and the 30 is a 2-bar short. So right here we're looking at the 30 on the left-hand side, and you see how it called a short there. But again, you know, you would really have to break down below here to say that I'm really committed to this short. Right now, it's going to give you a kind of a reading that is going to bounce around back and forth because you're right on that support line. That support line on the 30 minutes is 177 and change. You can see it's already up again today. But we saw this really nice trend. The trend has been up. We've seen a couple of dips that was called by the aileron, which is a plug-in or additional indicator on top of the Commander series. But basically, with the Commander series, you get 2 charts. Ignore the bottom for a second. We could take that off very easily. So it looks like this is when you open up the package, when you unbox, this is what it looks like. You can put up to 500 stocks on the top here, and anytime you click something, it's going to automatically reflect down here. The other one I want to look at is silver. Silver went a bit parabolic here. You know, we talked about a breakout above and a support level of about 1433, now trading at 21. I talked about this last week. I think somebody had a question. I said, you know what, this is looking really good. You know, you get above the levels, you know, kind of like 1752. Count back where we were last week. 1, 2, 3, 4, 5. So last week we were here at 1796, and it looked pretty good. And then we saw that parabolic move where everybody like is chasing silver, and everybody's chasing gold. Even Bitcoin was moving up last I saw it. Let's see where it is now. That's down now. But it had been starting to move up, and from this consolidation, look at this consolidation pattern right here. Right, look at this down move, and the up move, and a straight consolidation since May. Then let's look at silver for a second. You see that same down move and up move and a consolidation to the right, and once it broke out, I think we were talking about this last week, not to really just make you go a little crazy here, but with SPCE, and I talked about this flat, very long-term level. I'll draw that back on here. Of consolidation. And when we saw the consolidation, what we said was, hey, you know what? When you see these kind of flat tops and these areas that are significant, you know, you may want to think about it. And when we drew in last week, you know, right about there, that level right there, and we're starting to take off. I mean, look at that move from 20 to 27 since we last talked. And this is where there was kind of a number of times that we tried to get above and couldn't, held support very well, congregated around support very significantly, and then broke up and broke higher. So, you know, when we go back to this again, I'm sorry, I'm going to do this one more time. Go back to silver, and we see this same kind of, you know, kind of downward move, mini consolidation, a little bit of up, more consolidation. And then we look at what happened. This is a really good example, once again, when we could just simply draw a line and look at a couple of different points, right? This was a major point it had to get above, 1688. And once it did, it had only really a couple of nubs that it had to get past, 1722 maybe, but it was a light level of overall an indication. If you're playing on a swing trade, on a daily trade, listen what happened here. Let me just show you how easy it is to read this. I'm going to focus in on this. On silver, what we saw was a couple of back and forths and kind of in and outs, but a consolidation. We just talked about that. But then what happened? I think what happened here was really interesting, because what happened was we finally saw a breakout right here, and then look at this move, that move that was parabolic. There was so much compression. It was like a spring that was being loaded and loaded and loaded. And then once it released, it just, you know, went crazy. All the potential short positions that were on there, all the people that were thinking, you know what, I'll get in this eventually when it breaks out, finally had the opportunity to do so and felt like, you know what, I'm very comfortable here. I mean, and the last time we saw this was what? July of 2019, this break. Now, silver does have a tendency to get ahead of itself. You can see this time and time again. It gets a big move up. Now, one of the things you're seeing now is the dollar, the US dollar, has been fading. So let's pull that up. There's the Dixie for you. This is the dollar basket. But look at this move since April. You know, we saw some consolidation, then a total breakdown into June. okay? And then a breakdown, a consolidation again, trying to move above, it couldn't. And then look at the last few days. Now, if you were to flip this chart upside down, you know what it's going to look like to a degree? It's going to look like that to a lesser degree. But, you know, if you look at this and you think about the weakness in the dollar, big component of what's happening with regard to silver, gold, Bitcoin, and other assets in that area. But what else did I want to talk about here? Tesla. Tesla trading down 5.5%, down 86. I told you earlier when I looked at the numbers, it looked to me as though we did see that reaction situation get, you know, pretty much problematic. Right now it's trading at 1427. That's interesting. Yeah, 14. This is right at support, and there's been support going back to the beginning of June. If we break that, and I'm going to put something on the radar here. Yeah. You see this particular radar? You see this one? We have a big B here. See this big B? If you could draw a big B around it, I've done this before, and my drawing is not that good when I do this, so just bear with me for a second. Let's see if I can do this. There we go. It's a B. This one's kind of a big D. This one is a baby B. Baby Bs, and in reverse, Ps, well, both are problematic. Because what that shows is in the area, let's clear all this, in the area that is the top part of the B, there's very little volume, and the potential for this to gap lower or gap through is very high. So right now, that looks like is this support line, you know, at about, we said, give or take about 1430 or so. There's some support right here as well, this one. You know, that's kind of a little bit lower, looking at 1337. But look at this, there's really not a lot here in this gap moves that we've seen and that parabolic move, considering what's going on. And if markets don't cooperate, could be a big problem for Tesla moving forward. I mean, listen, Elon Musk already got all that he wanted. He got 4 quarters of positive earnings, and therefore what that means is that that positive earnings is going to possibly, those 4 quarters, going to allow for him to get into the S&P 500. Maybe. I would question that. The second thing is that he reached his milestones to get a couple, $3 billion worth of bonuses. So that's what's going on there. We talked about this one, TSLA, and I told you that this was kind of being confused with Tesla. And we noticed that last week, you know, it was kind of climbing up, moved from about $10 to $12. It's back down to, what, $9 right now. What else do I got from last week that I want? Oh, this actually, hang on a second. I want to talk about Space Tesla Chegg. So here's an interesting play. This is kind of a stay-at-home play. Well, not stay-at-home, but it's a company that does books, digital books. So there's a couple of different ones. There's a company called LRN that I was looking at. I mean, look at this parabolic move since, not even in March, by the way. It kind of moved in March and April, but this move when the realization hit sometime in, we'll call it mid-June, that, you know what, maybe schools aren't opening here. And they're going to have this, they have educational classrooms and a variety of other things. You need to check this out. Don't just take my word for it. But basically what you saw was a really big move off the bottom here and a very big parabolic move. Again, what we see here now is not to the same degree as what we saw with Tesla, but we see now here is a P, right? See that? See that in the radar? We have all of these in a really nice discussion in the when you buy and look at the Commander series or get the 10-day free trial, the instructions, and also over on Triggercharts.com. There's a lot of information, a lot of training videos, and anyone who actually is now has gone beyond their 10 days and subscribed. Well, you know what you get? You get a 4-hour course of information, education. So it's an online tutorial. So anybody that has, in fact, got a subscription that maybe you didn't know this was available, write us at support@triggercharts.com. All right, a few more stocks. We got, if you load up your stocks, somebody's asking for Blink, BLNK. Yeah, this also went parabolic. This is probably going to play with all the electronic car excitement that's going on. So right now, where are we? I mean, right now we're in no man's land. This thing just took off. It was forever kind of coming down. And I'm going to look at this a little bit different. I'm going to look at this weekly. I want to see this a little bit longer term. Yeah, that's what it looked like weekly. Because it's done a lot of splits. And, I mean, this stock was 3,500. So if you think that it could possibly get even to 100 at this point easily, $6 doesn't seem like a bad deal. There's a lot of hype on this one. But let's break it down. Let's take a look. All right. So we saw that this liftoff about in June as we saw the electronic car craze with Nikola and Blink and NIO and Tesla and some of the SPACs that are out there. One of them is called SPAC, SPAQ, which Fisker is doing a reverse move into that company. Fisker, which was bankrupt for a while, but is being bought by that company in a SPAC, SPAQ. And we saw a very, very, I would say, wonky action here. You know, you're in a big consolidation area right now from about, look at this range that we have. Actually, let's use our box tool. This range that we have right here. You know, talking about from 480 to 790 when you don't really have anything to go by. And then if you look a little further at the last one and the way that it moved, the width, I'm talking about the width of this box. These are really, really, really tough trading areas. It's one thing when you have a long-term consolidation along a bottom, and then you see a lift into, you know, off of that, and again, you get that spring that just moves and it kind of moves. At this point, this is a way too wide to trade with any level of confidence. What you could do possibly right now is think about a very small trade in this. If you're thinking about this, take down your overall amount that you're trading. Because I just think that this could be moving very easily down again to 470. You pick this up at $7, you know, you're going to lose 25, 30%. Are you willing to take that risk? If you think there's something interesting about this longer term, it's another story. Couple other ones that came in. Again, if you have any stocks, put it into the chat area. All right, this is Copen. Copen has a beautiful run. We called this many times, kind of moving in and out of the longs. No short calls here since March. Let's go backwards a little bit. I mean, yeah, you were coming into a, you know, constantly being a short from, I would say, what is this, back in August 2019. Pretty much a couple little bitties moves. If you can see this, all the way through April, March of 2020. Then it just started picking up. Obviously, something is being liked about this by people. But let's bring back our radar because I think it's really important in this circumstance because what I'm seeing by just looking at this is that there was a really good level of resistance / support down in these areas right about here, this kind of range about $1.43. I don't like to trade these penny stocks, to be honest with you, because they can be really wide. I mean, this thing came up, but where'd it come up from? I mean, it came up from 26 cents. So it's a great move, don't get me wrong, on the upside. But you know what? What we're seeing right now is, and when I want to put this back on, is the potential for really not a lot of volume in this area. You start getting up to 184 again, and definitely towards the $2. It could be a lot of resistance, and then the reversal is down to 143. I would feel much more comfortable on a chart basis only. Just looking at the chart, looking at this as at the 143 level. I'll do one more from here. What do we got here? DXD? No, we're not going to do that one. ACH. Aluminum Corporate China. Again, very messy. It moved up with the whole China move recently. I want to do one more. This has been all of a sudden coming back into vogue for some reason. It has to do with, obviously, their Northern Dynasty Materials, which was left for dead for a long period of time. Let's kind of look at this. Actually, let's go and look at this one weekly also. Like I said, left for dead, multiple splits. It was the equivalent of $21 at one point. I think there was splits on this. Right now trading at $2.43. So that was the weekly. If I change it back to daily, I like to just quickly change these back and forth to understand what I'm looking at. I'll put it on multiple charts on my screen. Basically what we're seeing here is a nice move, but we have, again, this, I would call this a small B, right? The small B on the downside. And the small B shows me there's a lot potential for this to move, no question. And if gold and silver keep on moving up and generally natural resources, materials move up, I would sense that this would also move up with it. But be careful about this. I mean, really, there's nothing to go by right now. Just because it's gone straight up from 60 cents to 250, I think there's a lot of fluff in there. But again, as long as we see natural materials, gold, silver moving up, I think it should be in good shape right there. Michael asked for miss. We'll go a little bit longer today. I don't know what's happening here. This is the weirdest looking chart I've ever seen. Whoa. I'm not sure what's happening with this stock. That's a kind of a weird looking chart. I've never really seen a radar that looks like this. Just a square. I'm not sure what that means, to be very honest. Let's take it off because it's kind of messing things up. So a nice move. Obviously, you're going to see with any of these pharmaceutical companies a significant potential for opportunity with regard to them moving on. Anything related to COVID, anything related to any kind of disease. I'm not sure what they do. It could be something totally different, but they get some kind of good answer. It's going to be good. A little bit weird chart looking for my blood. I would think that 1095, which is a pretty big range to the upside, will be a point that it'll be tough to get through unless something really is breaking on this name. I mean, you just got to watch the chart on this because all we have is a gap up right now that looks very significant. Another one, FPV. Nope, I'm not getting that one. Sorry. Square. Square, again, another stock that has that little hanging tree, right, where you're kind of hanging down the downside here. And, the potential move right back down to 106, I think, is very high. Right now you're in a short area, but all the shorts have resolved to the upside. And we've seen a very nice longer-term trend. And you can look at this on a weekly. The long-term trend, obviously, from the bottom here has been good. If we look back a little further, consolidated for a while and then kind of broke out. There's no reason why we can't see it kind of come in a little bit right now. And that will be, of course, there'll be a lot of reasons probably why, but forget the reasons. The chart itself is showing us that there is some potential for it. Yeah, see this gap area, the black area, nothing to the left when we always look from right to left. I do think that maybe 106 is something that I would be more comfortable stabbing at it. Last one will be Home Depot. Yeah, Home Depot is healthy. It's looked healthy. That was pretty ugly. Maybe a little bit overdone right now, but you're consolidating inside a nice range. You're breaking out to all-time, I believe it's all-time highs. If we take this out, take the center part out, right? Where are we? Our range is pretty wide right here in the center and the belly. And I would say that you need to just look for a continuation here. Again, a little extended potentially, and valuations are extended, but a solid company nonetheless. But look at this wide range here. That would concern me. Maybe if an earnings came out and disappointed, the potential, and that's a good support, 230, 237. I do like 237 because you can connect a few going across, right? Right there in that range. All right, well, anyway, visit the trading app store over at TradeStation. There's the link again for the Commander Series. And I will see you again next week. This will be recorded. You can find it on Triggercharts later, triggercharts.com. Thanks so much for joining me, and I'll see you again next week.